This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Hershel Mehta of Mehta Ventures. Hershel, thank you for joining us.
Thanks, Hall. Excited to kind of share what we're seeing and give some background on what we do and what excites us.
Great. Well, for those who don't know you, tell us more about your background. What did you do before investing in early stage companies?
Yeah, so I started my career as actually an accountant, CPA by trade. I graduated college in 2012. So what was happening at that time was the recent graduates, due to the 2008-2009 economic recession, were having a hard time getting entry-level jobs. So curriculum in universities, especially in business schools, shifted towards actual tangible skill sets. So accounting came natural to me. So I studied accounting after school, went ahead and took my CPA exams, started working at a regional large CPA firm here in Southern California. But in my heart, I always wanted to be an entrepreneur. I had started two businesses in college. One was a clothing company and the other was a fruit delivery company, both of which I was too immature to scale and to work hard enough to make them succeed. So while I wanted to be an entrepreneur, I was much more in the entrepreneur category at the time, learning that these types of things take full commitment if you want to do it. And I just didn't have the maturity at 22 to be able to execute at a high level. So after about 2 years of working in public accounting, I came up with what I thought was going to be the next big app, a couples social network, essentially allowing couples to find other couples to hang out with, set up their single friends, find restaurants that were selling romance, table for two, free glasses of wine, that type of stuff, deals for couples wanting to go on date night or have fun together. And the idea was that social networks serve an individual purpose, but when a relationship is formed, the actual identity of an individual changes to two people. And so why not have a social presence that kind of matched that? I think it was a decent idea. Obviously, there were flaws with the way I went about it. I didn't have very much experience. I left my job for about 6 months, built this app, got it into the app store with like a piecemeal team. Didn't want to take on too much risk, bootstrapped the whole thing. And meanwhile, I had my cousin who had two software exits. He's 20 years older than me, based in Mumbai, had two software exits and totally willing to help me. And either my hubris or my misunderstanding of his capacity and who he was kind of led me to push back and say, oh, you're in India, what would you know about the US market? What would you know about this climate? And totally kind of didn't really take his mentorship to heart. And so I look back and I'm like, wow, I made a mistake. Today my cousin, he's a top 10 angel investor in the subcontinent and has had huge success investing in early stage companies. And here he is telling me, hey, let me help you. And there I was saying, no, I think I got this. I look back and some of these errors I made are misjudgments and it's quite humorous at this point. So anyway, what ended up happening was bootstrapped it, ran out of my own funding, had people willing to support me, but wasn't willing to take on the risk. I was just a wimp, to be honest. Being an entrepreneur, you have to have crazy conviction and belief in what you're doing. And I wasn't there yet. I was a little too young, a little too immature. So while the app was in the app store, I went back to work as a CPA. I actually love being a CPA. I love accounting. I love actually building balance sheets, building financial statements and taxation. I actually enjoyed it. So quickly, when you're getting nice paychecks, the app kind of went wayside. And even today, it sits in the app store with minimal movement. And it's essentially a dead app. And I use it to remind myself of when looking at entrepreneurs, you have to really assess their ability to power through. I know how to fail, which is a crucial lesson. So come 2018 or end of 2017, my cousin, he had a couple large exits in some global companies. And I got a call to join the family office and start investing on the family's behalf here in the US. So since then, in about a year and a half, we've invested in 27 US centric companies, early stage startups, and kind of have seen them grow and where they're at. And it's been an awesome journey. So we deploy, as a family, we deploy a angel investing strategy where the goal is volume investments at an early stage, smaller ticket sizes, get to know the companies, get to know the founders, and the ones that we feel can execute and the ones that we develop a relationship with will continue to back at a larger scale in later rounds, kind of keeping the companies insular. So we do a couple things. One is access to India because of my cousin over there and his footprint, 30 years of technology building and investing, have a very nice footprint in the subcontinent, as well as so any startup that could potentially look at India as a market, we can help them access it. And then the second thing we do is, as a family office, we've developed quite a large network of family offices that would trust our judgment as early stage investors. So after we invest, I introduce startups to our network and help them close up the rounds, introducing to strategic investors, things of that sort. And then lastly, we also have a deep network of VCs and other angels that I'm close with, who I'll also push deals that we actually invest on. So we're agnostic investors, look at anything. We invest in people. I would say 75 to 80% of my actual decision lies within the founder. The rest would be market size and exit potential. So we're patient. I have no timeline on when to actually see an exit. I'd rather see entrepreneurs build really nice businesses and execute and go on the journey with them and help them any which way I can. So that's kind of the strategy and what we deploy, and some background on myself.
That's great. So what excites you right now?
Yeah. So obviously, with the pandemic occurring and the situation that we currently face, there's a lot of excitement in what entrepreneurs are building today. I think that in the face of adversity, the smartest people are going to adapt. They're going to create solutions that will drastically improve the new normal. This is kind of an unprecedented situation where people are home more, people are with their families, people are also a lot more lonely. Different things in wellness, in connecting people. This is really appealing. I also think the future of gaming, how we actually interact with tech, express ourselves, these are all interesting consumer behaviors. On the enterprise side, there's going to be a lot that's going to happen. So kind of these enterprise connection tools, the way that we actually engage, how businesses engage other businesses, that's very, very appealing to me. Things that make sales demos easier, things that make closing contracts easier. I think that there's going to be a lot of interesting legal tech that's going to come about. A lot of automation, robotics. The future of robotics is huge, right? The idea that if manufacturing can shift from a skill worker base to a skill robotics base, I believe manufacturing can come back to the US. We're going to see a lot of shifts in the type of factories that get produced. And it starts with corporates like Tesla actually pushing the envelope, but it'll go all the way down to small manufacturers, printing plants, packaging plants. These will start incorporating robotic elements. And that doesn't mean that skilled workers aren't needed. Who's going to build the robots? So who's going to maintain it? Who's going to perform repairs? So there's going to be a lot of interesting new types of skills that are going to involve actual software. So learning how to operate. I think the future of fast twitch is fascinating to me. The idea that a skilled laborer won't actually be using his hands to build, will be actually controlling a device using fast twitch and almost quasi game skills. That's fascinating to me. So softwares that are in training in fast twitch, that to me has been a fascinating space for the last few months. So looking at all different types of things, the reality is, Hall, is that as an investor, I will be taking the current situation in every decision I make. Any investor that thinks that this is business as usual that we're going to return to the way things were last year, I think is wrong. I hate to say it, but the world will be different tomorrow. There will be new ways that we'll start looking at the way that humans interact with one another. And those are the interesting opportunities for me.
So what's your advice for those who are investing in startups for the first time? We're at a pivoting point to a new generation, and there's going to be a lot of new skills and technologies. How do you advise them to take that into account?
Yeah. If you're a new investor, you have to understand the landscape. I would stay away from certain things that aren't COVID proof. While there will be very compelling investments in down rounds, meaning like, let's say there was a company that was in the sharing economy. The reality is that for the past month, it looks like for another month or so, the sharing economy is on hold. And the sharing economy, for the past 4 years has blown up, right? People are comfortable renting things from one another, and people are comfortable just peer-to-peer activities was booming, but that's taken a halt. Things like Airbnb, things like Turo, that kind of those marketplaces are declining in popularity. And I'm not saying that it won't completely bounce back, but you have to think about new different ways. So while a company can say that, okay, well, this is an interesting opportunity because they went through this downturn and valuations are down, I would think differently than that. I feel like looking at price, I don't think that's a smart way. You should actually look at innovation. So if I'm a new investor, I would consider the impact here before I make a new investment.
And so on the other side of that table, what's your advice for startups that are just now launching in this new economy?
Yeah, this is an awesome time for startups. A few things can happen. Obviously, startups that are maybe were 2 years ago and created a product that was impacted by people staying at home, that's very challenging to do a complete pivot. They'll run into some issues. They may have to recapitalize, but entrepreneurs can't give up. I've given up so many times, and I look back and it's like, I didn't have the makings of being successful in this space. If you're going to be an entrepreneur today, the tenacity to power through has to be there. You also have to be realistic. So if you are a startup in a space that has been impacted, consider pivoting, consider figuring out something new that you can do in the meantime that'll protect your business. I don't think everything is going to change. I think that our behaviors will change. That doesn't mean that music festivals will stop. That doesn't mean that people aren't going to fly anymore. It's just that velocity and that kind of trajectory and status quo, that has been disrupted. So think of something unique. Be creative to incorporate a new consumer behavior in what you're building. So if I'm an entrepreneur today, I wouldn't try to build something that isn't COVID proof. I wouldn't. If you're a small business, if you're a gym owner, if you're a restaurateur, if you owned franchises, this is a challenging time for any small business, for any entrepreneur that actually took a loan or didn't need venture funding. This would be hard. But if you're in software, this is a super time. You're going to have time with your team to actually communicate with customers. Customers have the time to talk with you, tell them what their pain points are. So you're going to have that time for interaction. You're also going to have time to develop relationships with investors. An investor might not write you a check today, but you can actually contact them, share with them. They're going to look at it in a month from now. You show them kind of growth and traction. It's going to get more appealing. So this is an excellent time for deep tech companies, for software companies to product build, do customer interaction, investor relations. So if I was starting today, I would work really hard. I mean, this is like the perfect time for three dudes in a garage building software. I don't think there is a better time where you can't go anywhere. There's no distraction. So if I'm an entrepreneur in these spaces, there's no better time. And yes, valuations will take a dip. Funding will get harder, but entrepreneurs and creators, that's the goal is not fundraising. The goal isn't to convince people to give you money. That's not what your job is. That's not what you're doing. Your goal should be to solve a problem, to create value for people, right? I think kind of a sitting down and understanding that how customers assess value and how you actually earn money through these unit economics is fascinating to me. So I think that the theory, Hall, is that real value is created when you charge a customer a certain price for a service or software or product, and they actually derive more value from that service, product, software than what they paid. And that return to basic unit economics, to value creation, that's going to be awesome, not only for entrepreneurs, but for investors. That kind of realization of customer first thinking and customers buying based on value. What am I getting out of this? Is my Zoom subscription, am I getting a lot more out of this than what I'm paying? And the reality is going to be yes, over and over again. Then you have a happy customer, and they'll continue to be your customer forever. So that type of realization is really, I think, is good for the ecosystem. And I think entrepreneurs that assess that, am I creating value? They're the ones that are going to power through.
Great. So COVID-19 is certainly changing the state of investing. In some cases, it seems to be accelerating what was already going on. In other cases, it seems to be pivoting a little bit what is going on. How do you COVID-proof your startup and make it successful in the next round? What are going to be the main drivers that will make a startup successful?
It's going to be kind of quickness of iteration. Early stage investors invest in people. So, I'll give you an example. And, I was telling you, before we started the podcast, I was looking at a company out of Orange County called Spaces last year. And they were in the retail VR space. I didn't like the model. I thought that, okay, well, this kind of one-time experience paying a retail experience, it didn't resonate with me. And the business was doing well. It's a really good startup with a really fun product. I just had some concerns with scale. So I passed on it. But nonetheless, I found the entrepreneur phenomenal. The entrepreneur not messaged me, he commented on one of my LinkedIn posts. And I really liked the entrepreneur. I found him to be incredibly talented. So I commented back to him saying, hey, what are you working on? And today he gave me a demo of the new VR product that they're coming out, which is connecting VR to non-VR using Zoom. So the idea of an instructor, a child educator putting on a VR headset and creating live content. And this was phenomenal. In 17 days, the software that these guys created was absolutely mind-blowing. So I'm sitting here, and I literally had this call half an hour before speaking with you all, and I'm going to do what it takes to get this guy the funding he needs, because this type of iteration, when I see that in an entrepreneur, when I see that kind of adaptability, his business, obviously was not COVID proof, but kept the team together, built this new software. This has become very compelling. They're onto something I think that's phenomenal. This is going to allow people to create compelling live content. That to me was mind-blowing. So that type of adaptability is huge. Those are the entrepreneurs that are going to be able to really survive. The idea that, okay, my business was impacted negatively. What can I do now? The whole appeal of investing in people and startups is that speed of iteration. And so if you are an entrepreneur, don't get hung up. Don't fall into despair. Iterate quick. This isn't the right time to give up, to think, okay, well, I can't do anything right now. I'm handcuffed. This is it. Be smart. Brainstorm. Try to adapt quickly and build something that creates value today. And that value will continue. While when I see this, I'm like, man, this use case is forever. Let's think about this entrepreneur in particular, right? That's creating a platform for a content creator to leverage VR to create compelling content. Let's say I'm a content creator and I use this software, right, to create content. I could create a children's TV show. I could create my own business, right? I could create something where it's like, okay, I could have 100 kids watching me. They have to pay me $5 a session, but each session I'm going to create an interesting VR content that's going to teach them a new type of math. And now when that entrepreneur is subscribing to this software, the possibility for the software maker is endless. So this was crazy iteration. And it's so appealing to see entrepreneurs do this. So as an investor, when I see people adapt and create value quickly, it's very appealing. Like this guy has sold me on him. And that's the most important thing you can do. If you are trying to raise money, and most venture startups, most software startups, you need to raise money. There will be losses in year one, year two. You can't create something that automatically starts making money today. So you do need some backers. But if you can prove quickness of iteration and convince an investor that you're the guy, the money will come and there'll be a shift. You may only take a little bit of money. None of these big rounds of, I don't want to keep fundraising. That's a bad mentality. Get some money with people that believe in you, give them value on terms, create something, build revenue. And when that happens, there'll be plenty of investors with dry powder that will give you larger rounds in the future. And that kind of shift to revenue path, quick, that's when the real value will be created. How can I charge somebody for this today? How can I give somebody value today? That type of thinking, it's going to be awesome. And I think that the best entrepreneurs will engage in that type of development.
Right. Well, we were talking about the different shift in the manufacturing and robotics world before we launched today. Can you tell us more about your views on what the new applications and sectors that will be important in the post-COVID-19 world and what you think might be a good position for investors to take?
Yeah. So the situation of when I look at how we're positioned as Americans, and then this is an American-centric thing, and I think that startups in the US this is still a top place to invest. A lot of opportunities in Asia, around the world, but the United States is special because of our entrepreneur nature. It's inherent. There's two types of American dream. The one is to build, create, do amazing things. And the other one is to build, create, do amazing things for an individual unit. So the first example of that entrepreneur that wants to create for the world, that's inherently American. So that'll continue. And so what I'm seeing, or what's resonating with me, is kind of the United States dependency on others, whether it's for PPE supplies, whether it's for medication, whether it's just for products and goods. That to me is so odd for a country that's so rich in resources and so rich in entrepreneur mental capital. This is unacceptable. And I think Americans in general are fed up with it. The idea that our hospitals don't have supplies, and that's mind blowing. I mean, this is our GDP is above any other countries, including China's, by miles. So why can't our healthcare workers have supplies? It's the weirdest thing. Why don't we have unlimited ventilators? Like why was this epidemic? Why is it going to be the worst in the US? So when entrepreneurs sit back and they think of creating for the world and they see the issues and the problems in front of them, there's going to be great things coming to this nation in the next 10 years. Entrepreneurs are going to want to build for the US. And there'll be a shift in mentality, right? With these type of crises, I think we as Americans, that's when we take a seat and we think, it's like what Kennedy, his famous speech, ask not what your country can do for you, but what you can do for your country. That kind of mentality, I think the answer is simple, and it's going to be producing things here. And so how can we beat cheap, skilled labor? That's been the question for 20 plus years. And the answer is simple. It's going to be through technological innovations. So when entrepreneurs start with that belief and that drive to make the home better, that's what I'm interested to see. I want to see this shift in manufacturing, in robotics, so that the US doesn't have to rely on somebody, that we can produce things very quickly and we can be self-sustained. Sustainability, especially when it comes to actual production, that's the future. And that's why I think a lot of young minds and smart minds, that's where they're heading. So super excited to see that on this front. And I believe it's through robotics. That's my personal opinion. So I want to see a lot more startups figuring that out. And then there's going to be a lot of software that comes with that. So software is on how machines and humans interact. How can we better maintain machines? How do we take robots and make them work for us? How do we control them? Things like this, like these types of actual deep tech innovations, I'm super excited.
You think we'll see a renaissance in U.S. manufacturing, and would that be a good opportunity for startups to pursue?
Yeah, I do. And I think that investor sentiment will come with it. And most investors are going to be return oriented. But the reality is that, like, if you are a tech investor and there is innovation being built, you want to be on the forefront of it. So you want to be a part of that journey. So when entrepreneurs dedicate their lives to these types of projects, the funding will come and the backing will come. And then we'll see things shift here. We'll see production shift. At least that's my hope. I'm not saying that that's 100% going to happen, but that's a dream of mine. And I think a lot of young minds, a lot of entrepreneurs are also going to believe in that vision.
Yeah, I believe, 6 months ago, robotics and AI were coming to take our jobs, but today people are viewing it as a necessity. You can't build hundreds of thousands of ventilators by hand. You have to automate. You have to use robotics. You have to scale up, and you have to have that supply chain here, not somewhere around the world. And so I think you're right. I think there'll be a shift back to U.S. manufacturing into building around robotic-centric systems and automated systems rather than around manual systems, because the volumes are too great, the times are too short. And I think we'll see a lot more flexible systems coming up where you can design up things, 3D printing and others, to generate things on demand at a much faster rate. But it'd be interesting to see where the startups fit into this and what innovations they can bring.
Yeah, so I made an investment last year in a company called WorkCloud. And these guys, they were working on manufacturing optimization, is particularly in printing and packaging plants. I like the business. The founder, he was just special. You could see it. He understood not only how to fundraise, but also how to actually build this product. He had the right pedigree. His father owned a big manufacturing plant, and he was able to create solid software in the space. Quickly, though, he realized that maybe this market is a little bit too small. Like, I won't be able to really get to where I want to get to. And so they shifted towards the end of last year. Now they're working on performance optimization, how to make humans in a plant optimize themselves. And that to me was really special, because now the software is absurdly scalable, right? And now manufacturing plants and it comes hand in hand. When human performance, when it comes to actual machine operations, improves, then production optimization is going to come as a byproduct. So kind of attacking the problem at the top, this was really appealing to me. And then the software changes, right? It's not about, okay, well, how can I get one more label per minute? It's more like, how do I make sure that this guy is doing his job correctly, and that if the machine isn't working, that this guy is not having any downtime, that he knows how to fix this, he knows how to operate this machine better. So these types of shifts, I think it's really, really interesting. And I could see software like this taking off. If he's able to capitalize on this idea of improving workers' production through education and access to actual materials, these plants will see crazy value. And the actual price per head is reduced, and it makes sense. Like, you want to empower your frontline workers. So this to me was like super appealing in the manufacturing space. And you think about that, right? Like that's not getting rid of jobs. That's making people do their jobs better, right? That's making it so the factory can operate better. That's making it so that if I'm a manager, I can train people better. The frontline workers can perform better. So these are all the new types of stuff that I think startups can really hone in on and work on. So excited for these types of ancillary products in manufacturing and production as well.
Well, that's great. So in the last few minutes that we have here, what else should we cover that we haven't?
I generally I enjoy, so being a volume angel investor or venture investor, one of the crucial things that I like to think about is how in this time when VC money is going to be harder, what is the duty of smaller checks, of smaller investors, and how can they guide entrepreneurs, right? So I talked about this earlier about kind of round sizes changing, valuations taking a dip. One piece of advice I want to hammer or kind of really share with entrepreneurs, it's important to remember that the goal of entrepreneurship is never fundraising. Fundraising is just a hurdle. It's a means to an end. getting a big round or seeing somebody else get a big round of funding should not trigger something. It should actually just that's not your goal, is to get money into your company. So the way entrepreneurs should look at value is two things. One is what they actually create. If there is value in that, people will pay for it. You should be able to generate revenue, right? And then the actual value of your business is actually the cash you have on hand. So what I mean by that is when you look at valuations as an entrepreneur and somebody invests in you at a specific cap, that is not the value of your company. The value of your company is actually the cash you have, and it's also the value of the actual asset that you have, not what you're going to build. It's what you've built. That's the actual value of your company. So what I mean by that is entrepreneurs should not be hung up on this idea that, oh, I can't dilute myself to a certain degree in the seed round. So it doesn't make sense for me to only raise a certain amount of money. The way that they should be looking at it is, what do I need to be able to get to the next milestones to then justify a much larger valuation and thus attract investors to grow the business, not to create the business, to grow the business. So this shift in what it actually takes to create your business, that shouldn't require a lot of capital. You should be lean enough. Entrepreneurs should be able to kind of weather that risk to create. And once the value is created, the later, larger growth rounds will come. And that's win-win for everybody. So the one kind of takeaway that I like to give to entrepreneurs is, do not think of fundraising as the ultimate goal. Get money into your company and create value today. The funds will come. Focus on what you're building. Focus on generating revenue. Focus on creating an actual business. Do not focus on fundraising. So that's the one thing that I think that this shift and this dry up of capital, and the reason the dry up is happening, it's not that there isn't money out there. The reality is that if, let's say I was investing in companies circa 2016 and 2017, and these companies were capitalized to a certain degree, and right now growth has stopped. The reality is, as an investor, I have a fiduciary duty to continue to support that company, which means I'm not going to write a $500K check or $1 million check into your company. I'm going to support my existing company because I don't want to see that company that I've already invested in go to zero. So the actual kind of new companies that are getting funded have to approach this situation differently. Today, it's going to be harder than it was 2 years ago or 3 years ago to get that round. So taper the expectations and focus on value building. And don't look at the past. Don't think that, oh man, I wish I did this 2 years ago. That's such a loser mentality. And investors don't waste time on losers. Like, I'll just be, I know that sounds harsh, but focus on today, focus on what you need to get done, focus on creating value. And when that happens, funding will come, the valuations will come, the exits will come. That desire to create value, that needs to be the basis of the company.
Well, I couldn't agree more. I agree with the entrepreneurship is not about fundraising. I think that's a great message for everybody to take. So how best for listeners to get back in touch with you?
Yeah, any entrepreneur, my sole purpose is engaging. So whether I invest or not, I love entrepreneurs. I love people trying. That to me is awesome. And not every business is investable. Not every business needs venture money. Like if let's say I'm starting a simple sandwich business, okay, something that is so simple, I'm selling bread and cheese, right? You don't need venture money. Like, you can scale that business to $100 million business, right? Bread and cheese. Everybody likes bread and cheese. Easy, right? Okay, I got a great bread producer. I can package this nicely and I can sell it. You don't need venture money. So if you're taking that risk, approach friends and family, approach an angel investor, tell them like, look, I can make a lot of money doing this. You don't need venture money, but you still are an entrepreneur. So engage with people, talk to people. There are mentors out there. I'm available. I'm on LinkedIn. My email is available on my website. Find it, email me. If I think what you're doing is interesting, I will respond. I'm always willing to hop on 15, 10-minute calls, hear people out, what they're doing. And remember, for me, as an investor, as a volume investor. 27 companies in a year and a half, that's a lot of investments. That's a lot of portcos. And my goal is to have 100 in the next 3 to 4 years, right? So I hear entrepreneurs out because I probably have a business that could potentially help. So these type of interactions this is the best time to do it. So reach out, let me know what you're building. Find my email. It's on my website. It's on the Mehta Ventures website. I'm available. Message me. Find me on LinkedIn. If it's interesting, I promise I will engage.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yeah, appreciate it all. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.